So the more you stay in this market, the more you realize you don't need a lot of things to become successful. All you need small things in one place. Small things that make sense for you to become profitable. Yeah. So in this video, I'm going to show you something very small that maybe you may add in your strategy to make things make sense. Forex trading pays a lot of money only if you know what to do. If you know what to do. So one thing I want to tell you, okay, before we go into this, learn how to trade. Learn how to trade, not to gamble. Get a trade. If you place a trade here, let your trade move. Don't be a scalper. Don't be a scalper. Because at the end of the day, if you're scalping, you're going to take like 6 trades, and you're going to find yourself winning 3 and losing 3. These 3 that you have lost, you're going to lose all your profits and some of your capital or all your capital. So most of traders are losing money because they are scalping. So don't go for scalping. If you can be a swingy trader, do that. And if you're trading gold, you can close your trade in 100 pips, 100 pips, 300 pips. 300 pips is good. 100 pips per day is good if you're a day trader. But if you're trying to hold a trade, at least go up to 300 pips, then close. If you hold the trades, it's going to help you. You get? It's going to help you to avoid over trading. So let's go directly to this, to our lesson today. But before that, allow me introduce you to Sure Pips Academy. You can join Sure Pips Academy anytime you want, and the mentorship fee is a bit high or little. It's not high because what I teach something that you won't find here on YouTube or anywhere. Mentorship fee is $200, and in this month I had 1 student and we are almost done. So next in August, I'm taking only 2 students. I want few students that I can concentrate on. So let's go directly to this. Now, look at these levels. We have A shape, V shape, and the gap. In A shape, so we are going to go in charts and you understand it very well. In A shape, we have these candles. We have the bullish candle and bearish candle. Bullish candle, let's say this is a bullish candle, and a bearish candle like this. Let's make it red. Bearish candle. This is the A shape. Here on the top here, the candle close, not the wicks. We don't include the wicks. As I said, wicks do the damage, but bodies communicate what's going on. But the wicks, they just damage. They take out stop losses. So we concentrate more on the bodies. We use wicks just to set our stop losses and take profits. So the next diagram here we have V shape. V shape is just the opposite of this, or the inverted this. So you get a red candle, a bearish candle, and a bullish candle. Now we are considering this level that will hold the price or slow down the price movement. I think we are together. Now the third thing, we have the 2 candles in the same direction. There is some time where you see that the market is bearish, purely bearish or purely bullish. When it's purely bearish, you have a bearish candle followed by a bearish candle. So where they join, that's what we call a gap level. Let's say this is a bullish candle. We have another bullish candle here, like this. Now let's use green again because it's the same, purely bullish. Now this is the level we were talking about. This is the level we are talking about. This is the level we are talking. And the bearish, we have the market that is going down. The market is bearish. It's going down like this. Now this is the level we consider. That's the level we consider. Those are 3 different levels we use here, and there are more things we are going to look at in this strategy, more and more than even those you have seen. We are going to have this strategy and improve our win rate to around at least 75 to 90%. To 90% win rate. You're not going to need anything if you learn this strategy. Put in time and practice. Practice, you're going to do it the way I have taught you. Don't go on the internet searching the strategies that look the same. Those strategies will make your win rate go down and down and down. What you need to do, concentrate on what I'm going to teach you. Okay, let's go to charts. This is gold. Now, if you see gold, yesterday we had this sell. We had this sell with my student. We had this sell. The sell that is still moving on, but we are almost closing. How did we get this sell? When you come to weekly, remember the other levels I have told you. We have V and A forms. This is a V form. This is a V form. We had to mark our level here because this is our resistance level. Now the market came directed to this level. Let me remove this. You see, the market came to this level, reacted to this level, then it rejected, and it's moving down in profits of how many? We are almost in 700 pips. Still going. Now, where is this market going to stop? Where is this rejection going to stop? Because now we are moving down. But where are we expecting to buy from? In this strategy, you're going to learn how to sell from here and buy from another point here. Why are you buying from here and why are you selling from here? We buy the top, we sell the bottom. This is what I want to teach you. You know the reasons. Why is it that in this week we bought? Why is it that in these 2 weeks we sold? Why is it that in this week we first bought? In this week daily we first bought, then we are selling, and you'll be in position to determine when will this sell end. When are we going to get other buys? That's why I'm saying don't go in for scalping. You see that the market is strongly in sales. But if you're scalping, you want more trades per day, you're going to find yourself here. Here, you're trying to buy from here. You're trying to buy from here. So here you're preparing yourself to lose money. So where you're seeing these buys, these are detail traders. They are trying to fight the trend, trying to buy. But now you see the market is strongly selling. It is still selling. Where are we expecting it to stop? Who knows? I know where I expect it to stop. Even this retracement you're seeing here, we anticipated this retracement, and we know why it is stopping from here. You can know why the retracement is here and it's reacting. It's not because of this fair value gap. No, it's not because of that. You need to learn how to trade. You need to learn how to trade in order to be in 1% of the profitable traders, or 5%, because all we know it's like 95% and above in the forex trading lose money. So let me stop from there as you continue.